sound check. Can everybody hear me loud and clear? Happy Sunday, everyone. Good morning, good evening, good afternoon. Maybe it's even Monday wherever you are right now currently in the world. Hopefully we look good and sound good. Welcome to the Market Kickoff with TopstepTV. I am Coach Jay. We're going to do a little bit of a prep for the week. This Market Kickoff show with Topstep is going to be hosted by a couple of different people every once in a while. I think a couple of weeks ago we saw Hoag, Gabe, JD, and Dolby run the show. I'm going to be running it tonight, but we're talking behind the scenes with the team about getting a rotation. You guys can get a look into how we prep for the week with the different personalities that you see on Topstep TV. But I'm here today. If it's your first time meeting me, I'm Coach Jay. I've been a Topstep performance coach since June of 2023, and I've been trading for the past 13 years in the futures markets for the past 6. Music's too loud. We can turn it down. All right, that should be better. You should barely hear it now. Turn the music down. I'll turn me up. Should be good to go now. All right, but what we're going to do, we're going to prep for the week. We'll go through a couple levels. Shout out to JD, puts the Topstep daily levels together for us every week. He let me know that those are ready. So if you are looking at the Topstep levels on your charts, they are going to be updated. All right. Let's focus here. All right, so we're going to go over the S&P, the NASDAQ, crude oil, gold, markets that have been moving. Maybe we'll do a little bit of a scouting report on something that we think traders may be overlooking and can be looking at for opportunity. Of course, the markets are going to open up in about 10 minutes or so. So, there is opportunity to take trades. You probably won't see me take a trade on this show here unless, something really good sets up. But let's take a look at it. We had I have a daily chart up here in the S&P. We had the SPY have its longest win streak, I believe, since 2004, where we had 9 up days in a row. We can see it in the futures as well. We did have last Thursday that ended lower than it opened, but that's just in the futures. If you look at SPY, it was 9 up days in a row. And that's coming off the back of comments from the president that said, hey, it's okay to buy. We did come down and test 50% equilibrium of that area, but now we're trading above it, right? We're closing above it. The high of that area, 55.16. I think the last time I did the weekly prep, we were talking about, what happens in this general zone. We were looking at a couple of things. The high of that candle being one of them, and then the 20 moving average on the daily being the other. That 20 moving average is this yellow line that you see on my charts here. We got the 50 moving average, which is the purple here. And yeah, I had to get a haircut. Had to get a haircut. I was tired of wearing the hat. Had to switch it up. Now I can go between no hat and a hat. If you look good, you trade good. I heard somebody say that one time. But we have the 50-day moving average, which we closed above on Friday, which was down at 56.19. And if you remember Friday's price action, it was kind of just a slow grind up. Friday felt a lot more like normal trading days, right? We've been with this extreme volatility over the past 2 months. Friday felt pretty normal. And I want to mention that because there are some traders that say, hey, you know what? Why is the price action so slow? I think we've gotten spoiled over the past 2 months with the volatility. But if we are to, get back to normal, if we see trade deals happen, if we see, us backing off from some of the increased tariffs, the markets are eventually going to go back to normal. And I think it's important for us to kind of know what normal looks like. And that was Friday. We see the daily ATR decreasing on the S&P. That's the bottom indicator that I have on my chart right now. We saw at the peak, daily ATR was about 225 points. It's at 146 now. And if we just take a look back to July of 2024, September 2024, that was somewhere near 90. So we're not in the clear yet. Of course, there hasn't been a deal yet, but we keep hearing headlines that deals are on the way. I think as of recent, as of today, we had the president, and I'm looking at the Trader Hub here, say, I will lower China tariffs at some point. And I think that's kind of what we've been hearing. It's at some point we're working on a deal. We haven't heard one yet. So in the back of my mind, I'm thinking we're still not in the clear yet, but things are sounding good, and we see the markets kind of responding to that as well. One thing I'm looking at with the S&Ps, April 2nd, which was Liberation Day, we are still trading in that range, 57.77 at the high, 56.73 at the low, and 55.60, we'll call it. Sorry, 56.73 at the 50% mark, and 55.60 at the low. Uh, when we take a look at the NASDAQ has already cleared this candle and trading above it, but these are the zones that I'm looking at in the S&P. 57.77 at the high here, right? What happens when we get up here? It's kind of uh, near that 5,800 major psych level, but um, it took a little while for the market to accept back inside this candle, right? We can see the couple of rejection days and kind of indecision that we had. Once we accepted inside of it, we can rotate to the 50% mark, which took a little while to cover as well, right? It took us a day to cover above that. And then the next target would be 57.77s up at the high here, right? I'm going to throw on and above that, right? And this is a weekly prep for the week. If we continue to see this buying, uh, one thing that's in the back of my mind, we're talking about, the SPY, a the longest winning streak in the past 20 years. About at some point we're going to see a down day. Now it doesn't have to be a complete reversal of this trend. At some point we see a down day. But if I'm doing a weekly prep and news continues to be good, the next target that I'm looking for in these equity markets is the 200 moving average on the daily, which in the S&P is at 58.80 right now. Right, but that's for the week. We do have some catalysts later on in the week, and we'll go through those in a little bit. But let's take a look at the NASDAQ really quick. And similar story here, but April 2nd, like I said, in the S&Ps, we're still inside of this candle. The NASDAQ closed above it. 20,031. That's going to be the lower end of at least today's price action that I'm looking for. If we come back and retest this, 20,031, that major 20,000 level is right there as well. We closed above it. Now I'm looking to see whether or not that acts as a support. It did on the 30-minute. If we go to a shorter time frame on Friday, we kind of played around with this 20,000 level for a little while, really trying to determine whether or not buyers are there. And once we closed above it, we got that slow grind up. So same thing in the NASDAQ. From here, we closed above the 50 moving average. We closed above the Liberation Day candle. I'm looking at the daily 200 moving average, which is at 20,702, about 500 points from where we closed, but it's really 2.5%. And we've seen the NASDAQ move 2.5% like it was nothing over the past couple of days. Again, the average ranges are coming down, but the daily ATR in the NASDAQ is still 617 points. So it might look far away, but that 200 moving average on the daily is kind of within one daily ATR's range if we spend all of that range to the upside. So we'll see what happens when we open up. But those are the targets that I'm looking at. I'm going to take these moving averages off for a second, take all the drawings off. And JD said the Topstep daily levels are updated. So a couple of levels that I'm going to be looking at as well. I don't use all of the Topstep daily levels when I have them on. But Hoag's levels, of course, are going to be important. Hoag has a weekly kickoff high at 20,530. If you know anything about Hoag's weekly kickoff levels, and they're not a suggestion to take a trade, but they're pretty good levels. Pretty good levels. He had one in gold a couple of weeks ago that is still the high of the market by one tick. So I'm going to be paying attention to this. Hoag doesn't give us the exact sauce that he uses to make these come up with these levels, but they're pretty good. So I'll be looking at that 20,530. He has a weekly kickoff low at 19,470. And that kind of takes us back into that April 2nd range, right around there, right around 50% of that. So I could see what he's looking at for that as well. And then I'm going to look at some of the volume levels. So we have settlement 20,195, just an important level I think to have on your charts at all times. But then we have things like value area highs and lows. Value area high in the NASDAQ 20,000. Sorry, value area low 20,136. Value area high 20,256. So levels that I would be keeping on my charts. I'm a volume trader, so looking at the value areas, looking at point of control from the prior session can be important. And again, these are not levels to say, hey, yes, take a trade when we get here, but a general area to look at to expect some type of market response when we get there. The yellow, the moving averages that I had, purple is the 50. The gold one here is the 20, and the white one is the 200. And to confirm weekly kickoff high and low, are these possibly pivot points? Yeah, you could look at it like that. Hoag says these are areas that he's looking for longer time frame market participants to adjust inventory, right? So we're day traders. We have to close all of our positions by the end of the day. Hoag is looking at some of these levels as saying, hey, you know what? If I was a longer term market participant, these are areas that I might interact with, right? So if I was long getting into this area up here, I might adjust inventory up at this level. If I was looking to buy, I might adjust inventory at weekly kickoff high. So it's general areas that he's looking at longer time frame market participants to interact with the markets. All right. Can you explain how you use the ATR? For me, I just look at it on the daily to see whether or not the daily ranges are increasing or decreasing, right? So that helps me set expectations for the outcomes of my trades. You know, 2 weeks ago, it was a fair expectation to expect a, you know, 300-point move in the NASDAQ in one direction. As the daily ATR decreases, if I'm expecting the same, right, I might have overinflated expectations for my trades, right? So I could be looking for 600 points, but the market's only doing 600 for the entire day, right? So that's how I'm going to use it there. Let's take a look at some of the news. Mm, we do have some numbers coming out, and got the markets opening up in a few. So I'll go over gold once we finish with this. But a couple of numbers we have for the week. We have PMI numbers coming out May 5th. On the 6th, which is tomorrow. On the 6th, Tuesday, we have a trade balance. We have a 10-year note auction. We have AMD earnings after the close. On the 7th, we have Uber and Disney earnings, as well as Uber and Disney prior to the market open. Then we have the FOMC rate decision. Right now, last time I checked FedWatch, there was a 96% probability of keeping rates the same. So I don't know how much of an effect that's going to have. Maybe, and we see it every time, but the press conference probably has more volatility with the questions that Chair Powell is going to be asked during that press conference. So we have that on Wednesday. We have a Bank of England rate decision on Thursday, jobless claims Thursday, and I thought this was interesting. An AI CEO Senate hearing on Thursday. AI CEO Senate hearing on Thursday. That's in the middle of the day. Um, I think AI companies right now are kind of the looking being looked at as the next frontier of tech companies. So kind of curious to just listen into what is said during that Senate hearing. And then Thursday we have a 30-year auction as well. The auctions, I don't know how many traders we have that trade the treasury products. The auctions are interesting, especially right now with the trade war that we have going on. Um, I saw uh, a headline today that said Japan isn't going to use its almost $1 trillion of holdings in U.S. Treasuries as a negotiation tool with the U.S. Right, and that's a big thing. The U.S. Japan is the number one holder of U.S. debt of those Treasury products, and if they were to say, "Hey, we're going to use this as a negotiation tactic and sell all of the Treasuries that we have," it's a big issue. China's number two. And I think we saw in the bond markets, in the treasury markets over the past couple of weeks, them selling off as well. Jack has commented on this, every time he's on Topstep TV, that this is a little bit concerning. But we hear from Japan that they're not going to use those as a bargaining tool, which I think is a good thing. All right, so market is open. Let's take a look at what we have here. I'm going to go back to the S&P really quick, and let's take a look at a shorter time frame chart. And open up right above 5,700, 5,705 was our open. and seeing the market sell off just a little bit. I'm not too surprised at this. Kind of see this push back into Friday's range. The high of Friday 57.20. What do we have? 57.24 half. Not surprised to see the market kind of push back into this range. Again, I'm probably not going to be trading this. What's going on, Coach Ray? How we doing, Coach Ray? We got to get you on one of these one day. Um, Not surprised to see the market kind of push back into this range. This 5,700 is going to be, a major level. We need to see convinced buying coming in above here uh, to hold us above it. So I would not be surprised to see us kind of fall back into 5660, 5670 area. All right, let's go over gold. We have not covered that. Gold on a daily. We had that kind of blow off top on the daily above 3,500 a couple of weeks ago. This is where Hoag's weekly kickoff high was 35.10, and we were rejected right at it. Gold is an interesting market right now. It's been rallying. The For however long you could remember, gold has been in an uptrend, right? We do see these pullbacks in this trend, but right now it feels a little bit different. Coach Paul and I have been talking about this. Shout out to Coach Paul, who I do at the buzzer with every day, Monday through Friday. But he was kind of talking about this flagging pattern that we are seeing in gold on the daily, and then a break of the low of that flag and close outside of that is kind of a shift in market structure. If the equities are rallying, the question we've been asking is, are we seeing market participants who may be in profit in gold, maybe selling it a little bit to move those profits over to the equities that have the potential to rally um, if we are making a deal? So uh, pull up the top step levels in gold. I'm going to take the moving averages off for now. We have settlement, which is at 32.4330, kind of right where we're trading right now. Weekly kickoff low, 31.80. 31.80. So that's about 2.5% from where we are right now. We have the weekly kickoff high, 34.36, which is, would to me, we would have to see that buying that we've seen in gold this entire time come back in. Because we'd have to break above this flagging pattern, right? If we get all the way up here, then why not make all-time highs? But gold seems like it's changed its structure, right? Where we've had buying this entire time. And I'm not saying that the uptrend is over in gold. I would be a naive person to say that on the internet where it's recorded. It's like, oh, this guy called a high in gold, and we're trading 500 points higher than that in 2 weeks. But I'm not surprised at this pullback either. In this uptrend, what we've seen a couple of times is when we get a little too extended above that 20 moving average, that we get a pullback to the 50. Right now, the 50 moving average is at 31.21. And just with the way gold is moving right now, if I had to put a bet on it, I would say we hit this 50-day moving average before we make a new all-time high, right? Again, anything we say here is for educational purposes only, not a suggestion to take a trade. I think we got Nightbot sharing the risk disclosure in the chat. But with the way gold is looking right now, it looks heavy, right? It looks heavy until it's not. I think we've seen this a couple times. Here we are extended above that 20 moving average. We get a pullback to the 50, it holds. And that's kind of what I'm looking at for right now. And let's take a look at crude oil really quickly. Crude opening with a gap down. Okay. All right. Crude is an interesting market right now. The fundamental news, I think we continue to hear that is there's going to be increased supply of crude oil, supply of crude oil. And if that's the case, it's going to keep driving prices lower. I'm not sure exactly why we're gapping down here like this in crude, but this is crude is already down almost 4%. Um, Remember, crude oil, if you're trading it in a Topstep XFA or live account, you don't have to worry about those limit down. Um, those are more for the equity markets. But crude is an interesting market in a downtrend. I was looking to buy crude last week, where we were actually not even last week, 2 weeks ago, where we had that April 9th candle, right? This is the day where we delayed all of the tariffs. Uh, This day in pretty much every market that we trade was an important day. Crude looked like it was going to trade above it, but if we look at the volume, when we closed above that, decreasing volume. Now, as we come back down, volume's increasing again. This was just a short covering move, in my opinion. Uh, so 54.50, which is the low of this April 9th candle, is the major level that I'm looking at in crude right now. I would not be surprised if we trade it before this Monday session first day of the week session is over. Uh, where would that put us actually? So crude settled. The settlement price for crude. Settlement price for crude was 58.29. Right now, we are about 3.75% from there. If we were to trade that 54.50 level, that's about a 6.5% move down in crude oil, which is not out of the question. This is not a market where if it looks like this, I want to buy it for a long time, maybe for a quick scalp trade. But crude is in a strong downtrend right now. If we look at the moving averages, again, this is on a daily chart. We are significantly under the 200 moving average, the 50s below that, the 20s below that. We can kind of see we came up to that 20, checked it, and used it as a resistance. This is exactly what the equities look like on the way down. Now, could this pop and go right back through this range? If I was a buyer in crude, 58.40s or 58.25, which is around 50% of this April 9th candle, that would be my target. And if I get a buy anywhere close to that, I'm probably not going to take it, right? If there's a long opportunity on a short time frame, if there's a long that sets up pretty close to this 58.20 level, I'm probably just going to pass it up. Where this looks like a potential area of rejection, where how much room is there really available if I'm taking a long up here? Uh, I think I'm okay not buying crude, not trading crude if I have to buy it, and only looking to the sell side. Um, because again, this is a market that has been in a downtrend. If we look at the past week or so, there are long opportunities in it. Most of these markets that we trade do present two-sided trade most of the time. Uh, this is just not when I'm looking to buy. Anyone trading crude, Bloomberg was saying 50 a barrel this year. We're not far off of it. We're not far off of it. And if we look at crude, if we look at a higher time frame, we are at some levels where you know we're below any low that we made in 2024 on this futures contract. We're below 2023 lows, and below this, there's there's a lot of room down if it continues to sell this way. But at the same time, we've bounced here on a higher time frame a bunch of times as well, right? So is this an area where we see longer time frame market participants come in and support this market? It's a good question. Where if we see this 55 area, 54 area act as a support, maybe you get a decent long off of that. But yeah, this looks extremely heavy right now. I'm liking gold for a short. I don't hate it. Don't hate it. We'll talk about maybe some trade setups. I know Dakota's coming on for slow markets a little bit later tonight. I'll talk about once I'm done with this prep. I'll talk about what I would put on my charts going into slow markets if I'm going to take a trade. I normally don't take a trade during the first 2 hours of this Globex session unless something pretty clear sets up. But I do prep my charts to kind of set myself up for the rest of the day. Look at the monthly and weekly on crude oil. Yeah, that look at that weekly. This is looks pretty heavy. All right, got some questions here. Could you show us an example of a fair value gap trade? I'm not necessarily a fair value gap trader. We could probably take a look at one. Um, but I'm not. I don't know if any of our coaches necessarily trade fair value gaps, but we could take a look at one. Uh, Edward says, when watching Topstep TV, I'm constantly told see money, take money, which is completely the opposite to what is advised in the book I am reading, which highlights the show's fear. Any thoughts? Uh, I think the see money, take money uh, kind of thought process depends on the market conditions, right? There are going to be some market conditions that facilitate you holding onto a trade. There are going to be some market conditions that facilitate you taking the profit when you see it. And really, that's a trade management question. For me, I'm usually a see money, take money person if the trade presents at least one R, right? So if I'm risking 40 points in the NASDAQ presents 40 points to me in a trade. I may not take the trade off if I'm looking for, 80 points, right? 2 to 1. But if it presents a 1 to 1 to me, I'm going to secure some of that profit, right? Where I don't want to trade to go 1 to 1 and then turn into a complete loser, right? So it really is about your trade management style. If we look at the equities last week or Friday, really, I took a long in the S&P at 56.74. We talked about this during at the buzzer. My target on that trade was 56.20, 57.20. We got to 57.20, but being 25 points in the profit and then sitting through this consolidation, at this point I'm deciding I'm just going to take the money, right? The market did eventually go to my exit, but we got to remember we're day trading here, right? So I have to think time frame as well when I'm taking my trade, and am I willing to sit through this consolidation, or are we even going to have enough time in the day to really get to my target? Eventually we did. I could always take another trade, but there was no way I was going to have this trade go 25 points in the profit and then turn into a loser. All right. When you have time, please explain the top step daily level indicator. Yep, we can explain it. So top step levels are going to be again a couple of different areas where the team has a general an idea that the market has the potential to respond to, right? So if we look at the levels that are here, we have last week's high, right? Very simple. A lot of traders mark it out manually themselves, so it just makes your job easier, right? Where if I'm zoomed into a chart this way on a 3 minute chart, if we push up to this level, I can say, hey, this is last week's high instead of having to go out to an hourly chart to see where that level is. We have yesterday's high. Friday was the end of the week, high of the week. There we go, right? Then we have yesterday's value area high. That is going to be based on TPO value area, right? So Hoag uses his TPO charts, right? That is the upper 70% of value for the day. Have the volume point of control, 57.13. That is going to be the level where the highest volume traded for the day. We have settlement, which is the price that the exchange marks the market closed or settled. 57.09. Basically, anything above settlement, the market's green. Anything below settlement, the market's red. Value area low. Again, value area is 70% of the range for the day. That's the lower end of value. Yesterday's low, pretty self-explanatory. Weekly kickoff highs and lows, those are areas that Hoag comes up with. He has his ways of coming up with those. But the weekly kickoff levels are Hoag's levels, and then last week's low, pretty self-explanatory as well. All right. I wish the daily levels told you what they were. They can. So if you right click on the price axis, you go to labels and say indicator name labels. There you go. You got them right there. For me, it just clutters the charts a little bit too much, but if you wanted them, they are there. All right. Other news that we had coming out. Shout out to Warren. Warren Buffett said that he's planning to step down as the uh, CEO of Berkshire Hathaway by the end of 20. I don't think he's the CEO of the head of Berkshire Hathaway by the end of 2025, uh, which is big news. Right. He's been in that seat for longer than most of us have been alive on this call. Um, he is stepping down, which is huge, right? I think we saw earlier this year him going to a very heavy cash position right before the market started to sell off, and short Berkshire. I don't know about that. Uh, I don't know if that's a short that I would take, but um, he is stepping down out of that seat. We talked about the earnings. I think AMD earnings are going to be interesting, right? I think we have Nvidia next week, and just seeing how AMD does, especially with their forward guidance on if these tariffs have caused any headwinds to any of these businesses, any of these chip makers, going to be pretty big as well. Will Sordo says, with such a large watch list, how do you narrow down what market to trade? I don't necessarily look at this watch list all the time, Will. I have a general the four markets we just went over, right? So we went over S&P, NASDAQ, crude oil, gold. For me, right now, I'm trading S&P and gold. Those would be the two markets that I default to. If there's no opportunity in the S&Ps and gold, then I'll take a look at the quote board and say, okay, what's moving percentage wise, right? I might look at a crude oil and say, oh, crude's down 4%. Let me go over to there because the S&Ps and the NASDAQ aren't really, sorry, S&Ps and gold aren't really presenting opportunities to me. Um, we use this quote board during At the Buzzer to take a look at the top percentage movers for the day. Because a lot of times, and we said, we might go through a scouting report. A lot of times we'll find a market that's trending if it shows up consistently in the top three percentage movers, right? So there's been a couple of times last year where the Japanese yen showed up in the top percentage movers, or uh, natural gas showed up consistently. It was a 3 month period where natural gas was in the top percentage movers. So then I'll push that closer to a chart that I'm going to trade. Right? I don't look at all 35 markets, but if every day natural gas is showing up in that top percentage mover, the way I look at it, I'm a volume and momentum trader. If there's volume trading, and it was huge moves in natural gas, it was 8%, 10% moves. I'm almost looking at that as I'm missing opportunity. And again, I'm not going to go chase every single opportunity. I'm going to default to S&P and gold. But if one of these other markets are moving, then I think it's worth taking a look at least. But that depends on where you are kind of in your trading journey. I think there's a good reason to stick with one market and master that market. I don't necessarily know that most traders need to be jumping around. Sometimes I question that myself, right? Hey, why don't you just wait for an opportunity instead of trying to find one somewhere? But speaking of which, the Japanese yen, from a technical perspective, is a market that's been in a downtrend over the past couple of days. We had a spike up early, and I don't know how many traders we have trading any of the currency futures, but they've been moving a lot. I think last week we saw some of the currency futures have 2% swings in either direction, where there's a ton of opportunity. Where if we look at uh, Friday's price action in the yen compared to the equities, there's a lot more fluid price action here. So if I had a scouting report for an outside market that we don't normally trade, it's going to be one of the currency futures, either the yen or the euro. How do we have the numbers on the quote board bigger? You can just zoom in, but then it's going to make everything bigger. It, TopstepX is browser based, so you can just zoom into your browser. I don't know that you could actually change the font on the quote board. All right. How much time we got? We got about another 20 minutes or so. I'll answer some questions that you guys have. And then again, I'm going to prep my S&P chart for the week or for the day. So I'm going to take these indicator labels off. I'm going to take the levels off. And what I do every session, I'm going to mark out the high and low. We still got 10 minutes left for this first 30-minute candle. So I'm going to wait here. But what I am going to do is just put a VWAP on there uh, because I want to know how volume responds to the range that we print. And then what I'll do once this 30-minute candle closes, I'll mark the high and low of that candle. And that's going to frame out my story for the day, right? It'll frame out my story for slow markets. If I do decide to trade tonight, we have this first 30-minute range. How does the market respond to this range? Does it stay inside of it? Does VWAP stay flat and I trade it like a range bound market, or just turn my charts off and say, you know what, if we're going to stay in this range overnight, then I'm just going to trade New York session. That'll be uh, the rest of my prep for these charts. But again, I need about 10 minutes or so to wait for those candles to close. So let's get to some questions. And if it's all right with you guys, I'm going to turn some music back on. Um, I appreciate all of you being here, but sometimes it feels like I'm talking to myself. Play some background music just to, and hopefully it's not too loud. You guys let me know whether the levels are okay with the music. Maybe we'll play something not as hype. Let me get to some questions here. Sir Tron says, why do you prefer ES over NASDAQ? I prefer ES over NASDAQ right now because of, it respects levels a little bit more. As far as liquidity goes, it's a thicker order book, right? Sometimes we see 20 tick spread in the NASDAQ, or even during normal times, we see a 6 tick spread in the NASDAQ. Uh, the S&P is just a little more of a calm market. I think we hear all the people on Topstep TV say, you know what, I'm getting older. I don't want to trade the NASDAQ. The pace is a little bit too crazy. Uh, there have been trades I've taken recently in the S&P that worked out really well based on how I measured risk. If I took that same exact trade in the NASDAQ, it was a loser. So it just uh, allows me the space to kind of scale up if I wanted to. Right, I'm a lot more comfortable taking a 3 lot, a 4 lot in the S&P than I am in the NASDAQ. But you know, trade whatever fits your personality. Right, some traders are going to look at the S&P and say it's too slow. I think right now, especially with the increased ATR, increased range that we've been seeing, it's the exact opposite of the S&P that we had, 6 months ago. If the ATRs really do come down and get back to normal, right, where we're seeing 80-point ranges on the daily in the S&P and 300-point ranges in the NASDAQ, then I'll go back to the NASDAQ. But for right now, the S&P is presenting a ton of opportunity. How many monitors do you use and what size? I got 1, 2, 3, and then a fourth one over here. The fourth monitor that I have over here, I usually just put chat on that, and that's like a 19-inch, one of those portable monitors, and I'll take it if I go work from away from my desk. And then the 3 I have in front of me are all 27-inch monitors, and I usually have charts on 2 of them, and then news or whatever on another one. But I have four screens in front of me. Right now, these are the only charts I have in front of me right now, actually. All right. What time frame NQ do you use for supply and demand zones? 30 minutes for me. Anytime I start getting into drawing levels, I'm going to look at 30-minute charts. I'm going to look at volume spikes like this. For example, this one here, something that we can mark out here, 56.93. We had NFP last Friday. This 30-minute candle here is that NFP reaction, and the 27 minutes after it, or that full 30 minutes of that NFP reaction. So I'll mark that out as a potential area. Again, what happens at 56.93, right at these highs. And then if we trade through this, I'm looking for a rotation back to the middle of it. And then if we go, why my target on that long that I took last week was 57.20 was because if we go back to April 2nd, we had this candle right here, which was right before the announcement for Liberation Day, exactly where we're going to get. We saw a sell-off. So this kind of general area is what I was looking at as a target. But I use a 30-minute. All right. Do we have a reset bank yet? I don't know that they are. I don't know. That's a good question, actually. That's a good question. I know that I did have an issue with the TopstepX account last week, and shout out to Topstep support team. They were able to help me figure it out and apply a reset to my account, which was cool. What's the best volume indicator, and how do you look at? Oh, there is a bank, J Chill. Awesome, thank you. So yeah, there is a reset bank. What's the best volume indicator, and how do you look at volume based on what? Ship K, best volume indicator. If we're looking at TopstepX, it's just the volume indicator. I know Coach Robert uses something that's directional movement index, which I think is pretty nice as well. I don't know it enough to teach it, but I simply just use the volume indicator. And what I'm looking at, I normally execute my trades on a 3-minute chart. So what I'm looking at is, trying to find high volume, right? What do I consider high volume? It's anything that sticks out. So something like this, right? This was 12 p.m. Eastern on Friday. So what I'm going to do is frame out that high volume and then see how the market responds to it. You can see this high volume was the range for the rest of the day in on Friday in the S&Ps. And then if you attach a VWAP from there, which I think is maybe the greatest volume indicator, it was a flat line, which tells us that volume really wasn't doing anything. I'm going to rephrase my answer. VWAP is the best volume indicator that you could use. If you were to trade only one market based on yesterday's move, which one would it be? I understand you mentioned it on Friday that you will be looking long NQ if it breaks the monthly high. If I had to trade one market today, it would be the S&P. Can we add notification alerts to the platform? I think it's on the way. It's definitely on the roadmap. It's something that a ton of traders have asked for. I don't have the timeline on it, but it's definitely on the way. How do you measure momentum? Good question. You're gonna make me pull up my Pond Tower charts. Give me 1 second. But I am measuring momentum by reading the volume, right? Whether or not, if there's a move in either direction, I'm looking at whether or not there's enough volume to sustain that move to the upside. Let me switch over to the NASDAQ really quick. If we look at when the markets move fluidly and when they don't, I'm looking at the volume average. Let me change this really quick. How are we liking this music? Can you guys hear this? Jazz vibes all right for everybody? Can you guys even hear it? And if you're asking how I read the volume, hopefully you signed up for the 150K subscriber classes that we do. This week for me is technical analysis, and everything is going to be volume based. So hopefully you signed up for those. I'm going to explain all of that there. I think it's a lot to go over in the next 12 minutes. Yeah, I'm playing music. You should be able to hear it now. I didn't want to make it too loud and drown me out, but you should be able to hear it now. But Will Sordo, to kind of answer your question, I measure momentum based on, and just a general eye test on how much volume was needed to actually get the markets moving in a direction, right? To me, direction is momentum. So I'm looking at how much volume did it take to get the markets to move in a direction. And if anyone was with me in the VIPs, if any of my VIPs are here, they'll tell you that sometimes what we do when we're reading volume is look at how much volume sustainably are we going to need to get a move in a direction, right? Lower volume is normally going to mean consolidation. So a lot of times when we consolidate this way, I set a value, again, based on what we saw when the markets were moving, and say, unless we get X amount of volume, I'm not expecting a trending move, right? I'm expecting the market to stay in this consolidation. I had a call with the VIPs last week, and through all of this spike here, one of the things we talked about was I need at least 4,000 contracts of volume in the NASDAQ on a 3-minute chart. And again, this is going to be relative to the time frame that you use, but I need 4,000 contracts at least to break out of this range. And if we see it, we never really got sustainable volume over 4,000 contracts, and we consolidated, right? So how much volume is it going to take to move the market, right? You need to do an assessment of that and then see whether or not the market's actually giving it to you. Okay, Andrew, no problem. Got my Kenny G vibes going on. Salty War Pig, not feeling the jazz. All right, so we got about 7 seconds before this candle closes, the 30-minute candle. I told you guys I'll look at the high and low of all of these candles. So here we go, 30-minute candle. This is really where my prep is going to start for the rest of the session. I'll go here and attach a VWAP to it. And what I'm looking at, if VWAP stays in this range, for me, if I'm going to trade it, I'm buying the low extreme and selling the high extreme until that changes. Right? I'm a volume and momentum trader, and if VWAP is flat, that means there's no directional momentum in this market. So price might leave this range to the downside. Just because price leaves doesn't mean that volume is. So I'm going to fade that extreme and buy it. If I'm going to trade it, right? If I'm selling here, kind of hoping that selling momentum steps in, and right now they haven't shown that. So if I see a trade in the S&Ps right now, it's to fade that. Let's take a look at gold. Gold, same thing. We got a 30-minute candle. We'll look at VWAP from there. And again, so far it's going to be a flat line, right? We don't have a ton of data, but as we continue to build 30-minute candles, then I'm going to see whether or not they present an opportunity. And this is usually why I don't trade for the first 2 hours, right? Also, the Asia session starts at 8 p.m. Eastern, which is about 2 hours from now, where we're going to see more volume come in. So for right now, again, if I saw a trade opportunity with VWAP being flat this way, not much I could do right here. Feel like if I buy or sell gold, it's a 50-50. But if we trade up to the upper extreme here, it's a sell. If we trade to the lower extreme, it's a buy until this picture changes. Take a look at crude oil. Same thing here. All right. So sometimes right now for today, right, these are showing that there really isn't any opportunity. Sometimes we see a market open up and it's what Coach Paul and I call the urgency trade. Sometimes in the next half an hour period, that VWAP is already leaving the range, and that's a take the trade type of setup. We're just not seeing that kind of urgency right now, right? We had the first half an hour print, and most of these markets are kind of chilling in this range right now, so not too much for me to do. But if we saw any urgency, natural gas actually might be the one that's kind of presenting it right now. You see how this VWAP is above the upper 50% of this range right now? And again, we'll give it some time to kind of print, but this looks like the closest. And why did I pick nat gas? I just saw it on the quote board, top percentage mover. This looks like the closest for potential to give us some urgency to the upside. Now, I didn't do a full analysis on natural gas. Kind of makes sense to the upside. So that would be a trade I'd look at. How long do you wait to trade in a day session? If it's slow markets like this, I'm usually not taking a trade before 8 p.m., before the first 2 hours, unless it's, clearly defined. Sometimes we get news prior to a session, right? Over the last couple of weeks, actually, we had, a tariff escalation or something like that over the weekend. I'm more prone to take a trade when the market opens then, because there's a specific catalyst that's moving the market. But otherwise, I'm going to wait at least 2 hours to take it during slow markets. And then if it's during the New York session, I'll usually wait the 3 minutes, right? I'll wait for a 3-minute opening range before I take anything in the equities. All right. Is this what they mean by opening range play or opening range break strategy? Yeah, so the opening range breakout strategy, plain and simple, the simplest way to do it is identify the range, right? What's the high and the low? If the market breaks the low, sell it. If the market breaks the high, buy it. For me, I add volume to that because of the amount of times I've seen false breakouts, right? Where if I'm looking at a 3-minute opening range in the NASDAQ right now, I would be short if I took this because we broke the low of the range, but I'm a volume trader. I believe that volume moves the market. Right now, volume is up here, right? Volume hasn't left this range. This VWAP hasn't left. So for me, I can't take this short, right? Because of that rule I've added. Could it work out? It definitely could. I just wouldn't be in it if it did, if it looks like this. Can you explain the reason behind price gaps and percentage-wise price would come back to fill the gap? Price gaps happen when the markets are out of balance, right? When the markets are in balance, they consolidate. But if there's a catalyst or a reason for the markets to trade different prices when volume comes back in, that's going to give us a gap because there was a reason the market said, hey, you know what? We want to be trading at different prices. As far as coming back to the gaps, I think they are kind of visual targets where there's an area where there was no price action at all. So sometimes we see the market come back to them, but I am not a believer that every gap on the chart has to get filled. Right? If we start to see price action in the direction of the gap, then it starts to act like a magnet and say, yeah, that's a decent target for us to have. But some gaps on the charts don't ever get filled. All right, for the 150K classes, I pick Hoag. Will your classes and other coaches' classes be posted somewhere? So they are posted for anyone who viewed them. I think it's still being discussed whether or not those are going to be open to everyone that signed up, but they are being posted, right? They're being recorded. I think it's still a question of whether or not they're going to be shared to everyone. All right, we got about 9 minutes left. Let me know if you guys have any other questions for me, or any other markets you want to do a quick analysis of. I think micro Bitcoin is actually an interesting one. Okay, so talk about urgency. This is on a 3-minute chart, but this is what I'm looking at on a higher time frame. You see how we have this 3-minute candle here, and immediately after that 3 minutes, that volume left that range. Let's look at what this looks like on a 30-minute. So looking at this micro Bitcoin chart, this looks like a sell, right? Just on this shorter time frame picture right here, where this VWAP is kind of leaning towards the downside. It hasn't left the range yet, but we still got 24 minutes in this 30-minute candle. But on the 3-minute, it's showing me urgency, right? So I'm looking at whether or not this continues. And then I'll look at, are there targets that a gap down in micro Bitcoin? Are there targets to the downside that I would be looking at? And if I was going to short this, it would be Thursday's low, 94,670, and then to see whether or not we can kind of break this support here. What tool is this? I get asked this question all the time. It's the fib tool, but I just take all of the middle levels out, right? So I don't have a 236, a 382, 618. I just want to know the high, low. I just want to know the high, low, and 50% of all of these candles. So I just use the fib tool, but you could use a rectangle tool, right? And on the rectangle, just check the middle line, right? Someone asked, how do you know the 50%? Just let the tool do it for you. KJ, I anchor VWAP to a couple of different places. The first one, which I really don't need to anchor to, I could just use the VWAP indicator, but because I'm going to anchor so many throughout the session, the first one is going to be anchored to the first candle. And then after that, I'm going to anchor to any high volume candles after that. Please show how you draw anchored VWAP. Drawing tools over here. 5 icons down, you have projection. Halfway through that menu, you have anchored VWAP. There's a star next to mine because I use it all the time, so it shows up in this little panel up here. I'm going to click on the 2 candles with the line going through it, and then click on a candle. Anchors it from there. Studebaker, yeah, you could use a Gambox also. Same thing. I don't know if gold can bounce. Daily seems to be in a good position. Let's see. Right now, it could bounce in this general area again. Gold has been in this uptrend, so we did break this support like we were talking about, around 3280s, 3290s. But here's another. I'm not the chart pattern guy. Are we looking at a head and shoulders here, chat, or no? Kind of like a slumped shoulder over here. But if we break below 3200s in gold, you want to pump hard? Yeah, anything can happen right now in these markets. I feel like a lot of these markets are in decision-making areas right now, where anything can happen. What's the benefit of using an anchored VWAP as opposed to continuous VWAP? Anchored VWAP, I can anchor to a specific event in the market, and it's going to give me more recent information. So a continuous VWAP is going to take into account low volume time. All right, so let's say I have, on the NASDAQ chart really quick, let's say I had VWAP for the whole day here. But then we get some low volume chop, we get extended from VWAP, we got more low volume here. It is pulling us higher, but the market's getting kind of extended from it. Let's say I see this high volume spike here, and I say, okay, since this point now, how has the market responded? VWAP is flat. So I'm looking at, from this 3-minute candle, the market is directionless, right? We've decided to trade in this range. Flat VWAP tells me to fade the extremes of a range. Trending VWAP tells me to look for an opportunity to buy it. So if I don't anchor this here, I may still be looking for opportunities to buy this market because we're above VWAP. You know, some people are going to say, don't never long above VWAP, never short below it. And I'm going to say, anytime you think in absolutes in this market, you're probably pretty close to making a bad decision, because nothing has to happen all the time. But this is why I'm doing it. So from this point, how is the market responding? What do I mean when you say what do you mean when you say volume isn't leaving the range? I was saying earlier that the best volume indicator might be VWAP, right? So what I'm looking at here is, this is a range. This candle printed a range, 20,192 up to 20,254. Then I attach VWAP to it. If I think that volume moves the market, if this volume never leaves this range, then no market participants are convinced that we need to trade outside of these prices. What does it look like when volume leaves the range? Here's another. Why am I anchoring it here? This was NFP. Non-farm payroll. We had a news event, right? I anchor VWAP there, volume left the range. So the market established this range, and the volume that's trading these prices is saying, hey, we are going to continue to buy this higher. This tells me to look for opportunities to buy. This tells me to look for opportunities to fade the extremes of the range. If gold starts rising again, do you think the equities will start to drop? That's been the correlation that we've seen, right? Gold down, equities up. But at the same time, if we look at 2024, the end of 2024, we had both kind of rallying at the same time. So I don't necessarily know that it has to happen that way, right? If we look at 2024 here, gold still rallying, and then I'll go over to a NASDAQ chart. Actually, Coach Robert told me there's another way to do this. There we go. I don't know if that helps. Maybe a side by side. Let's do a side by side. '24 equities rallied, gold rallied as well. So it doesn't necessarily have to. In this current condition, yes, I think because I think if gold continues to rally and equities sell off, then there's going to be a headline that causes that, and then yeah, we will see that. All right, got about 2 minutes left here. I'll get through some other comments, and then we'll have everyone head out to enjoy the rest of your Sunday. Get prepared to trade with Dakota for slow markets. I know you use Quantower. Does it have bookmap features to see the heat map? Yes, Quantower does have a version of bookmap. It's called the DOM surface in Quantower. It's not exactly the same, but it does have a version of it. I don't use it, but it does have a version of it. Red sauce or green sauce? It depends. Depends on the day, really. If earnings like Nvidia, Apple, AMD, Microsoft are bad this term, do you think we can see a pretty hefty sell-off? Yeah, I think so, right? Those are... There you go. Andrew posted a picture. Let me see if I can get the DOM surface up real quick. See how quick I can get in my production bag and bring up a... Where are we at? DOM surface. All right. Can you guys see this? All right, so this is Quantower's version of bookmap. Basically, I don't use this. I just look at the depth of market to see price levels. But we got, some orders up here, 20,128 in the NASDAQ. We can zoom in. There's 3,300 contracts sitting up here, right? So the question is, when we trade up to these levels, how does the market respond to them? We got some liquidity sitting on the books down here. So this is Quantower's version of it. All right. But I think that's it, everyone. Like I said, I showed you guys kind of what I'm looking at. I'll switch back over to Topstep X charts really quick. In order for me to take a trade now, I have general levels that I think the market has the potential to trade to for the day. Now, all I want to see is what shows me a signal to take a trade. Now, 30-minute range, you see price leaving the range. Some people may look at this and say, yes, that's a short. If that fits your playbook, go ahead and take it. For me, VWAP is kind of starting to leave to the downside or tilt towards the downside. So it's not a click the button yet, but it's looking like if this continues to trend lower and we get, tests of VWAP and rejection, then I would take a short, right? Same thing in the S&P. We're starting to see that VWAP act as a resistance. If it leaves this range in the next 30 minutes, I'm leaning to the short side. Gold is still kind of flat, right around that 50% of that candle, and crude oil flat as well. So we saw a big reaction in crude, but nothing after that. So that's it. That's kind of my prep. The markets are forever changing and updating. So, I could say, hey, we need to trade to this level, and then a headline can come out and can completely change that. So when I do a prep, I want to have a general idea of where I think the market could trade on both sides, right? To the upside, to the downside, what's the case for both, and then see which one the market presents and go from there. I don't think personally, it's not our job as day traders, especially, to try to say where these markets are going. Our job is to be a great follower. So anything I do in my prep is to try to follow what the market wants to say. And if that's to the upside, to the downside, I try not to have an opinion and just go from there. Markets just seem to be not in a rush. Yeah, I think, these are headline-driven markets. There wasn't much as far as headlines go over the weekend that I saw. So the next headline we get, we're going to move. Prep also. We have, and this is something I talked with the VIPs about, and if you check in the coaches library in Topstep Discord, there's a document that is titled Defining Market Personalities. And Coach Ray and I put that together almost a year and a half ago now. But I do it all the time. When you are prepping for the week, right, and you want to have a general idea of what type of market environment you're stepping into every day, I think it's important to know what the catalysts are for the week, right? So we have FOMC this week. That's on Wednesday. In normal market conditions, how often are we seeing huge trend days before FOMC? Right, so we got 2 days before FOMC this week. If market conditions are normal, and I'm expecting trend days prior to FOMC, I might be doing myself a disservice. So for these next 2 days, for Monday and Tuesday, I don't know that we're going to see a huge rate decision on Wednesday, but I'm also not expecting market participants to get too directional over the next 2 days. What does that mean? I'm expecting range trade. Now, if the market presents a trend, then I have to trade the trend, but I'm not really expecting too much with big earnings after closes and FOMC later in the week. These 2 days, and we'll see, next week when we do the prep, whether or not this is actually the case. These first 2 days of the week, I'm expecting consolidation. Wednesday, I'm expecting trend. Thursday, maybe some trend, and then Friday, we'll see what happens. This FOMC is expected to be a nothing burger, but we will see. I think more so than anything, like we talked about, the press conference over anything is going to give us the volatility. But we'll see what happens. We'll see what happens. All right, we're going to go ahead and end it there. I want to thank everybody for joining. Hopefully you had a great weekend. Somebody asked earlier how my weekend was. My weekend was good. Went to a friend's housewarming, bought a house, and it's always good to go and celebrate, get off the charts, hang out with friends and family, and get some time off the charts. This is actually the first time I'm looking at the charts. I looked at them an hour before we got on here just to kind of map out some levels. But it was a good weekend. So hopefully you all enjoy the rest of yours. If you do take any trades, trade smart, manage your risk management over everything. You could have exactly where you think the market can go, but if you over leverage on the way there, you might not get to your destination. Dakota coming up with slow markets at 7:30 Central. Then we have Aaron doing the London Open at 12:30 Central. D with the Euro trade at 3:30 Central, and then we will be back on Topstep TV for the opening call starting at 7:20 Central Time. I'll see you all for fast markets tomorrow. I'll be on with Dakota. Trade well, manage your risk, and we will see you all then. Thanks, everybody.